Okay, so we're going to do some basics on stock swing trading today. We're going to look at Shopify. This is just a daily time frame right now. We've just got some bars on there. We see lots of gaps because of earnings. We can see some big support and resistance zones that I've put in purple here down at the bottom. We can see towards the end of 2023, we pulled up. We had a lot of clustering in here. We gapped out, but then we came back to test. Then we had earnings again, and it pushed it up to this pivot here. And then we had earnings again, and it pushed us down, and we were in this bearish trend. I put this channel in here, and then we go a couple more earnings. We test this support and resistance zone again, and then that earnings gapped us up and pushed us out of this bearish trend, and now all of a sudden then we're in a bullish trend. So just looking at basically that's something that every single stock trader should be able to put on their charts, understand where those major support and resistance zones are, and whether we're in a downtrend or an uptrend, and put those channels on. But how do we trade those? These are the things that we need to be looking at. So this is just a standard bar chart where green bars are bullish, red bars. But we've got lots of gapping in here. It's very difficult to with that price action to look at algorithmic type strategies that will identify where we are in the trend, how to trade that, and again, different types of strategies. I'm going to look at two different types of strategies today. First, I'm going to go onto this daily time frame, but I want to smooth out that price action. So one of the things I'm doing, I'm on the TradingView platform here. I'm going to go from bars and I'm going to go to high Kanashi candles. Okay, so all of a sudden now we can see a smoother picture of that price action. So those averaging candles now are just smoothing out that price action within those channels. Okay, so once we break out of this bearish channel, we've got to look for trading opportunities within this channel. Now, one of the things on the daily time frame that I always look for, and I've been using Elliott Wave for a long time, and I think our first Elliott Wave software was for the Think or Swim platform some 11 years ago. We have it for lots of platforms now, but I'm going to add this to the chart now. First of all, I'm going to add what we call the false breakout stochastic. Talk about that in a minute. And then I have the Elliott Wave oscillator down here with some measurements on. Then I'm just going to activate the Elliott Wave, and I'm going to talk through some things here. Just move that out of the way. There we go. Okay. So we are going to look at trading opportunities during this trend here on a 195. We'll talk about it in a little while, but the main trade I want to talk about is this fifth wave move, which is still in, by the way. What we do with this Elliott Wave indicator suite is we find the low. The low is obviously this pivot here, and we can isolate that low. This pivot is very, very strong because we've tested this zone on numerous occasions over the last couple of years, and we know it's very strong. So just by talking to ourselves, just to say, okay, this is the bearish trend channel. We've now had earnings and it's pushed us out there. We've broken that bearish trend. We're now in a bullish trend. Let's keep an eye on this bullish trend and look for opportunities. We'll talk about the earlier opportunities in a little while, but I want to talk about this main opportunity right now. So this opportunity came in around about 8th of Jan 2025. After this earnings in November, we had a big push up here. Three tests on this channel here, and then a wave three, slightly higher at this point. So some things that we look at down on these subcharts here with the Elliott Wave indicator suite is this oscillator. So this is the highest point during the wave three. This is the highest point of the wave three actually, where it was, but this is the point of the oscillator here. So we measure from there to the 0 point, which is right where the red meets the green, if you like, to keep it simple. So then when we start pulling back against there, and this is a natural pullback, it's profit taking. People got in here and we rode the wave. It's really good. Wave three, post earnings, some good money, and then people start to take profit. But it's an orderly profit, and we can measure how orderly that was with some tools. So back down at the bottom, you've got the Elliott Wave oscillator here. We can see the oscillator comes in between 90 and 140. This is our sweet spot during this wave 4. It should be below the 90, but never break the 140. We can see the oscillator down there stays comfortably in our ideal behavioral zone. We then look at the false breakout stochastic. So during these little yellow bars on the top there in the overbought zone denote a strong bullish trend. When the stochastic pulls back on a wave 4 during that strong bullish trend at the same time as this oscillator, we look for a crossover in the oversold zone. We get 2 actually, because we've got a bit of a complex wave 4. That's fine. So we've got a tick in the box for behavior, the false breakout stochastic, and we've got one for the oscillator. Everything's looking good. Now the wave 4, the pullback zone is this green zone, but also there's a confluence there. We talk about confluences a lot. There's a confluence of this this channel. Okay, this is a non-linear support and resistance zone, and the wave 4 pretty much is tested where that is there. This green zone is an 85% probability it's going to go and hit the 5th wave, and it did last week. Okay, how do we enter this trade? You see we've got some blue and red EMAs. These are 6-4 moving average highs. We see that actually in advance on the right hand side there. So once the price action finds support in this green zone, we've confirmed that behavior with the stochastic, with this here, with the oscillator. We look for a long when we break out of that 6-4 moving average high, around about $107, $108. And then we are trading that 5th wave, okay, all the way into earnings. If you want to hold through earnings, again, that's a different type of strategy. We talk about looking at those previous earnings cycles. But one thing I would always suggest is if you're going to hold through earnings, you've got to be very careful of those stops, because it could gap down beyond your stop. That is one thing. But for me, I'm always looking for those longer term sort of moves, and this is a great longer term move. So in reality, we're still in this now. This 5th wave target zone is in and around the center line of this channel. If it can get up above there, we could get a nice run on Shopify now when we would stay in this trade. So what will happen is, if we're just using Elliott Wave right now, if this current 5th wave exceeds the length of the wave 3, that's in price, the software will automatically readjust that to a wave 3, and we're looking for another wave 4 pullback. Okay, so that's the Elliott Wave indicator suite, available for lots of platforms, very, very simple to use and obvious. We isolate using tools here. See the bar number count at the top there. We see, and we keep an eye on these stocks each day. Oh, it's just here. What did earnings do? It pushed it out of that channel. We're now in a bullish channel. That's where we're going to isolate. We look for the bar count here of 2317. We go to Elliott Wave, into the settings, and set the start bar number on 2317. Now we're just measuring the trend, and we're waiting, and we're being patient. So that's the 5th wave move. Really, really strong 5th wave move. We can, once we get into this sort of bullish trend, we can look at smaller time frames to actually look at shorter term swings. And we're going to look at that now. We're going to look at the 195 minutes. So 195 splits the trading day exactly into 2. So you get 2 candles per trading day. So I'm just going to adjust this here and bring the 195 over. So what I've got on here is the xBrat Algo. So this is a confluence type strategy. One thing that I will say here is we use those in conjunction. So what I'm going to do is I'm going to look at some of these trades right now, but I'm more interested in this this confluence of this point here, and I'm going to draw on a line here. So one thing here, this 3rd wave just after earnings, this was traded with a 6-star buy signal here. We look at the price action coming up to test this resistance here, comes down, pushes through, comes back to test as support, comes back down, tests as support again at this channel low, the trend channel here. So this is a really good position to be in and understand that we could go for a 6-star buy signal here. But one of the things I talk about in my book, confluence, not coincidence, is these confluences on multiple time frames. So this is the 195. I've got a 5-star and a 6-star buy signal here. So what I'm going to do, I'm going to put vertical lines on here on the 5-star. I'm going to leave that in purple, and I'm going to sync in layout because I want to show you where that will be with that 5th wave trade that we just did. I'm going to clone it, and then I'm going to put it onto the 6-star buy signal there as well. Okay, so this is the 195. It's a different type of strategy, and we have a confluence bundle where we look at the Elliott Wave for swing trading, we look at the xBrat Algo, we've got the manager to help manage those trades there. But the main thing today was for me to cover off the Elliott Wave, understanding how the chart looks, just smoothing that price action a little bit. But then I wanted to touch on confluence to give us more confidence, if you like, that this is a good, strong trade, because on a different time frame with a different strategy. So a 5-star buy is 11 out of 12 points of control saying go long. 12 out of 12 is a 6-star buy. So now if I just now go back to that daily here, we can see those same vertical lines on the 195. This one was the 5-star buy signal. Where's that? Just as we're breaking that's this candle here. Let's go really sort of intricate here. So this candle here before didn't quite break the 6-4 moving average high there. So in essence, what we're looking for is a stop market order breaking that. Let's change that color. So really we're looking, this high here, we're looking for a stop market order that breaks that. This on the 195, remember, this was a 5-star buy signal. So we've got confluence, okay? We've got confluence of, we know we want to trade that 5th wave. What additional information have we got from a totally different strategy on a 195 that splits that trading day into 2? We had that move. So let's just put that, let's sync that one in the layout as well on this candle here. We go back to the 195. Let's make that big. Okay, so this, remember, every 2 candles is a day. So again, we get this 5-star signal at this point here. Now that gives me the confirmation to go. We go long. Also, we look down at the bottom here. This is our bias depth heat map. It's on the swing trading setting. All 6 time frames are green. If I just extend it a little bit, all 6 time frames are green. So 6 time frames higher than this time frame are all bullish, going long. Another confluence. So, we're going back to that daily to say, I understand where we are in the trend. I've probably traded some of those 6-star buy signals in here, shorter term swings, but my long-term swing, or when I'm adding to my position for a long-term investment hold, I've got a lot of confluence here. I've got a lot of rules that have to be met for the behavior of that wave 4. I talked about this earlier. Go back and watch there. We see that behaves properly. We start to move away, and then we get in confluence from the 195 with the xBrat Algo, 5-star, 6-star buy, we go long. At this point, we're at the 5th wave. We can be sensible here and switch to the 195 to manage this swing if we're swinging it. Okay, so here on this point here, we can see on the manager we have a green ribbon. In fact, this ribbon's been green all the way since this 6-star buy signal here on the xBrat Algo. So it still remains green on these pullbacks. So this ribbon is like a management ribbon. If it goes red, get out. We can actually change that to be more aggressive. At the moment, we're on swing trading. We can actually change that to maybe day trading conservative. You can see here, for example, we were red going into this long trade. Now we're green. That's a more aggressive. So that's the manager. And again, that's included in that swing trading bundle. So down below here will be quite a few links. So individual link for Elliott Wave, which is fantastic. But then the confluence bundles. So you've got to find those confluences between different strategies is very important. It's like all the stars aligning and it really going well. And then the trade management tool, the buyer step heat map for that confirmation. Really strong strategies for stock swing traders and investors. Let's go back to that daily. So just to leave you with the Elliott Wave here. And by the way, don't forget to subscribe to the YouTube channel. I think we've got nearly 800 videos on here. Lots of different things from swing trading stocks to day trading futures and crypto, using technology to help us find those high probability trades. So this was a simple textbook trade and they happen all the time with stocks. Hopefully that helps. See you all soon.